This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. U.S. officials confirm Israel has struck targets inside Iran. Iranian state TV says its nuclear site in the area is completely safe. Brent crude jumped above $90 a barrel. Treasuries gained with the dollar and gold as well, as the growing risk sends investors scrambling to safe haven assets. Plus, we look into how the use of drones has changed warfare. Our Bloomberg Originals investigation later this hour. It's just gone 8 a.m. across the Emirates. I'm Bonnie Quinn in Dubai, and a fast-moving situation in the last couple of hours. We did now get confirmation from two U.S. officials that Israel did strike, a retaliatory strike on Iran, this on the city of Isfahan. The technology center, the nuclear technology center, which is around the city, completely safe, according to Iranian state media. Isfahan believed to have been one of the launch sites for the April 13th attack, and this, of course, a retaliatory strike. Now, the New York Times is reporting that Israel defense officials say its military struck Iran. Pretty unusual for Israel to actually come out and own this. Iran, for its part, hasn't blamed directly the attack on Israel. We did see a huge flight to safety. That's coming off a little bit now. We have gold back below $2,400 an ounce. Brent crude had risen above $90 a barrel. Now we're at $89.25 a barrel. So it does appear that the markets are digesting this news and taking perhaps Iranian state media at its word that things are proceeding as normal. We do, however, have flights stopped in several cities around central and western Iran, including Tehran, and we shall see how this progresses. We are keeping an eye on the headlines. So let's get to Paul Wallace for more of the details. Paul, how did this all unfold?
Hi, Bonnie. Well, this happened a few hours ago when there were reports of explosions in Isfahan, which is the third biggest city in Iran, a city of more than 2 million people. The details are still quite hazy at the moment, and there's been no official confirmation from either the Iranians or the Israelis or the US about what's actually happened. And the Iranians some Iranian sources are denying there was a missile fired into Isfahan. That it may be the case that that doesn't rule out drones were fired on the city. Israel, as I say, has yet to confirm anything, but we're being told privately by US officials that this has happened, that this is Israel's retaliation for the unprecedented attack it experienced on Saturday night when Iran fired more than 300 drones and missiles at its territory. From the information we have so far, it seems as if this is a pretty limited strike. There have been no reports of anything like civilian casualties. Isfahan has many nuclear facilities, which Iran is saying are totally safe at the moment, but it also has other non-nuclear, other military facilities that are nothing to do with the nuclear sites, and they have probably been targeted. But it does so far look like a fairly limited attack. Of course, it doesn't mean this is the end of it, and Israel could do something again later. But as for now, this doesn't look like, and it's very significant, but it doesn't look like a major damaging hit to Iran.
And perhaps symbolic as well for the site that was chosen. But Paul, US officials did tell us as well that they had some advance notification of this, which is interesting because it seemed like the rhetoric had been being dialed down. Is there any truth to perhaps the speculation that maybe there was a deal done and that if Israel stayed away from nuclear targets, which it appears to have done to some extent, that then the US would perhaps stand back when it comes to an invasion of Rafah?
There were some reports circulating in regional media yesterday about that. U.S. officials are downplaying that, and Israeli ones too, that there was any kind of quid pro quo over Rafah, which as of now the U.S. still doesn't want Israel to launch an assault on, and which Israeli officials say will happen at some stage. In terms of this what looks like an attack on Iran, Israel had a range of options. As you mentioned, the nuclear sites were probably the most escalatory of those options, and that would have been the most aggressive move. The US and its European the US and European nations and Arab states who obviously wanted no reaction from from Israel to last weekend's assault, or if they did do something, they preferred an action that wasn't going to provoke anything like a regional war. This may be it. This may fulfill Israel's wish to respond, but at the same time, not escalate things too much. We're going to have to wait and see over the next few hours and perhaps the next few days if that's the case.
Exactly, some more official comments. Paul, thank you so much for joining us this morning. That is Bloomberg's Paul Wallace there. Well, of course, the Asia session took the brunt of the market reaction, so let's get a closer look at what actually happened and what's happening now. Avril Hong is in our Singapore studio. Avril.
Yeah, Bonnie, we really saw that risk aversion as those initial unverified reports on the explosions in Iran, Iraq, Syria came in, and we saw stocks really getting hammered. There are those reports from state media in Iran that the nuclear sites in Isfahan were safe, so that's prompting some retracement of the big moves we're seeing earlier, but still the Nikkei deep in negative territory, earlier falling as much as 3.5%. The infotech sector in Asia, the hardest hit, a bit of a triple whammy, not just from geopolitical tensions, but hawkish Fed speak and then TSMC lowering its outlook for the chip sector. Among the Asia currencies, we're seeing that pressure also renew, no thanks to the surge in oil prices, and the Swiss franc really today burnishing its credentials as the safe haven of choice in times of geopolitical tensions. We're seeing oil as well moving off what we saw early on in the session where it surged past the $90 handle. That's what we're seeing for now. Bonnie.
Avril, thank you so much. Avril Hong there in Singapore. Let's bring in now Sammy Char, who's Chief Economist at Lombard Odier. And Sammy, I just want to talk about the market reaction here first for a moment, because it does seem like we're coming off the boil a little bit, that this was a quick strike. Iran and Iranian state media seem to be downplaying it. If this is indeed the retaliatory strike that Israel had been promised, could the worst be over?
Well, it's a very dangerous game that is being played where each part is trying to have the final word. So there can be a mistake. It can go too far from one side or the other. But indeed, the responses so far have either been telegraphed or relatively moderate. So yes, there is a path for de-escalation here, and we could have seen the worst. But of course, the tension remains high, and the possibility of a mistake is obviously there. So we'll need to watch the reactions going forward. But there is indeed a path for de-escalation.
And of course, Sammy, you know, you're the Chief Economist at Lombard Odier, so I don't want to put you on the spot, but if we take this into the realm of monetary policy, which I guess, you know, we can, if we draw the string a little bit hard, pull on the string a little bit hard, does it make it more difficult for the Fed to do its job if currencies are extraordinarily volatile, which, you know, events like this make them?
Not necessarily so. I think what's difficult for the Fed currently is actually the part of CPI that is being driven by demand rather than the supply issues or the energy issues, which are perhaps easier to deal with. The problem with the US is the sticky part that comes from services. Services is demand, and you know that demand needs to come from somewhere, and that's a robust economy, consumers consuming because they have jobs, because they have rising incomes. So it's from a different side, I would say, that makes the situation complicated for the Fed. And if it's demand, if the economy is too strong, well, you know, obviously what's happening on the energy front and what's happening on the supply front is perhaps not going to help. But I would say the biggest challenge here for the Fed is to manage the demand of the U.S. economy, and that comes from, again, the other side. It comes from domestic America, not from the Middle East.
If we were to see oil above $90 a barrel for a protracted period, if this were to escalate, and you know, so far there are no signs that it will, or that the Strait of Hormuz or anything like that will be impacted, but if it were, would that be an inflationary problem for the Fed?
So it's the start. I would say we're on the upper hand of a normal range currently. 90 is acceptable, not particularly disruptive, not massively inflationary. Maybe it has a couple of tenths of basis points, but that's totally manageable. I would say it's not necessarily the above 90 level that we would be worried with. It's more above 100. And then if you get to above 110, then yes, Bonnie, you're right. You start, being at the beginning of another energy shock. So of course, we need to be able to prevent that. There seems to be enough supply, at least from the OPEC side, to prevent an escalation of the oil price above 100 or above 110. Just north of 90, I think, is still manageable. But obviously, this is a very key channel of transmission from geopolitics to the real economy and market, is absolutely what happens to energy markets. For now, it's contained, so let's hope it stays that way. But obviously, this is something that we're monitoring very strictly.
Exactly. And, before this came onto our radar, so to speak, we were obviously very focused on what happened yesterday, Fed speak-wise, which turned out to be very hawkish. John Williams with comments and so on. Yet you at Lombard Odier still see 3 rate cuts this year, even though we actually now have Williams allowing for the fact that there could potentially be a rate hike next. How do you see 3 rate cuts fitting into the rest of this year? So
Fed speak is important, but what happens to inflation is even more important. So if our base case remains that inflation is going to continue to converge to a landing zone, let's say between 2 and 3% this year, let me mention that, by the way, PCE inflation is already between 2 and 3%. Yes, CPI and particularly services in the CPI report is still at elevated level. That has a lot to do with construction element around housing and around insurance costs. But I don't think Fed speak is more important than what might happen to inflation. Again, if inflation surprises on the easing side in the coming 3 to 4 months, the Fed speak is going to change materially. Again, 3 months ago, the market and the Fed was, probably acknowledging several cuts, and then we had 3 months of tough inflation reports. That can change pretty quick as well.
Sami, we have to leave it there, but thank you so much for this morning. Sami Char is Chief Economist at Lombard Odier. We do want to get back to that geopolitical reaction in the markets now, though, with Garfield Reynolds, who heads our Markets Live Asia coverage. Garfield, it's amazing how fast geopolitical risk can be priced into and out of markets, right? We're already sort of retracing our steps, but what scars are going to be left on these markets this Friday?
Well, there's going to be a few of them. One of the key pressure points really is what's gone on with bonds. Treasuries came into today looking very vulnerable because you had Fed speakers overnight talking about the potential that if the data gets worse from here, rate hikes could come back onto the table. To then turn around and have yields drop by 10-year yields dropped as much as 14 basis points at one stage. So now, as we look around the markets now, and we'll see what London makes of it, we'll see what fresh information we get. But traders are busy unwinding a lot of the extreme moves out there. I noticed the yen has almost erased its gains. The Aussie dollar was down by less than 0.4% recently. It got down as much as about 0.8%. So the traders are busy recalibrating their expectations to sort of add a little bit of Mid-East risk premium rather than the huge servings of risk premium we had earlier. That leaves, as I was saying, treasuries very exposed. Remember, the end of last week, treasuries rallied a lot going into the weekend when we knew, apparently, that an attack was coming, only for them to turn around and drop on Monday and Tuesday this week when the response was that the attack has come and gone and now maybe risk tensions can ease. We won't get risk tensions easing quite as much, but we also still, therefore, will have oil prices sticky, as was being mentioned. That might not cause a lot of concerns on the inflation front, but it's not going to make it any easier. So I think treasuries are facing a very interesting rest of the day, along with a range of other assets.
Yeah. We definitely saw a whipsaw. I mean, right now we're only down 8 basis points on the 10-year yield, 4.55. But obviously we've seen dip buying emerge yesterday. So, how does the Fed calculate all of this? We're seeing these markets being whipsawed by so many different things, not least the inflation data, as you were saying. But the Fed needs to calculate how easy or not easy financial conditions are. How do they do that?
Well, they'll want to try and look past what went on today in Asia anyway as mostly noise. The concern will be if what's gone on with oil and other commodities for that matter, if that does extend what had been. So one of the big stories with inflation coming down had in particular been goods disinflation. Now, the goods disinflation impulse was waning already. What's gone on the past week or so, that makes it harder to see sustained goods disinflation. That puts the pressure back on what goes on with services inflation. That's been a long concern. If they see services inflation start to ease off, then they can get a little bit less hawkish. But if they don't, then that hawkish impulse has got a little bit of extra oomph to it from the ultimate outcome of what we've seen over the past week in the Middle East.
Garfield, thank you so much. Garfield Reynolds leads our Markets Live Asia team. Up next, almost 1 billion Indians start voting today, beginning a 6-week process. We're live in Chennai. This is Bloomberg. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. Almost a billion India population begin voting today in the world's largest ever general election. Prime Minister Narendra Modi is widely expected to win an historic third term. For more, let's bring in Bloomberg's Menika Doshi, who is outside a polling station in the southern city of Chennai. So, Menika, how is the first day going? It's going to be a pretty long process.
It is going to be a pretty long process. Forgive me, I think the heat's getting to me. We've seen voter turnout here in this constituency in central Chennai calm down a little bit as the sun climbs, and heat waves in the peak of summer across India, whilst these elections are going on, are going to be an important determinant of turnout and therefore outcome. But equally important are going to be India's economy, which is currently the fastest growing in the world, but comes with weaknesses in consumption and faces a daunting task in creating jobs.
Menika, India gets its oil from Iran, and obviously we're seeing an uptick in geopolitical tensions, to say the very least. Will this change the election, the outcome potentially?
Well, India has diversified its oil sources over the course of the last 2, 3, 4 years now, and you've seen India move very tactically whenever its oil supplies were under threat. For instance, when the Ukraine war broke out. Oil will have two kinds of impact on India. We import most of our oil here, so as prices climb, the bill becomes bigger for us. We're seeing some reaction in the currency market already today, but that may not pass on directly to citizens or voters because the oil marketing companies in India, most of them are owned by the government. The second impact will be how voters perceive a fragile world in the context of these Middle East politics and the kind of leader they seek to choose to be able to help the country navigate these geopolitical times. That will be another key determinant as this election moves on.
Menika, thank you so much. Looking forward to speaking to you over the next 6 weeks. That's Bloomberg News editor Menika Doshi there in India. Plenty more still ahead. This is Bloomberg Daybreak Middle East and Africa. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai, and we continue to follow the headlines coming out of Iran and Israel this hour. But Saudi Arabia wants to compete with Dubai for international travellers, with ambitions to attract as many as 70 million arrivals this year by 2030. The kingdom's Minister of Tourism told us more about how the current tensions could impact that goal. Have a listen.
Last year was a very strong year for the Kingdom of Saudi Arabia. We was the highest growing country among all the G20 countries, with 56% growth versus the previous year, and therefore our plan is to continue this level of growth and capture the strong rebound post-pandemic. The tension in the region is very serious. We hope it is for the short term, and we wish this will not get escalated. However, the first quarter was a strong quarter for Saudi Arabia, and we have seen a double-digit growth comparing to the first quarter last year.
Just on that, we understand His Royal Highness Mohammed bin Salman has spoken to his neighbours, to the Qataris and to the Emiratis. The language there uses, I'm just curious, how is Saudi working to actively de-escalate? Is that the right way to frame those conversations?
The escalate in the region is not good for anyone, and therefore Saudi Arabia, as part of its role as the biggest country in the region, and always look for peace and stability, which is in favor of everyone, is stepping up in this situation and trying to contain the situation with its neighbor.
You have lived through many escalations. I just want to get a sense from you. How would you describe the situation in the Gulf right now?
We look at this, it's the Middle East. The Middle East have been always historically in tension, and we look at this very serious, and we hope it will not impact the trade and travel and tourism to this part of the world.
So you've had a double-digit growth year on year in the first quarter.
Absolutely.
I'm curious then, how much of that has been religious tourism and how much of that has been global tourism? Because that is the objective, isn't it? To balance, to rebalance.
Absolutely. It's about 50-50 because we have the holy month of Ramadan in the first part of the holy month of Ramadan in the first quarter.
That was the Saudi Minister of Tourism, Ahmed Al-Khatib, speaking to my colleague, Manas Krani. Meantime, we want to get back to these markets because we have seen an amount of movement overnight. Brent crude back below $90, significantly below $90 a barrel now, but still elevated at $89.16. Gold back below $2,400 an ounce. It reached about $2,417 earlier on reports of that strike by Israel on Iran. Iran's Tasnim now is saying that there are no reports of a foreign attack against Iran, so a lot of downplaying from the Iranian side. Do stay with us. This is Bloomberg. This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. U.S. officials confirm Israel has struck targets inside Iran. However, Iranian media now rejecting reports of any attack. Brent crude jumped above $90 a barrel. Treasuries gained with the dollar and gold as the growing risk sends investors scrambling for haven assets. Plus, we look into how the use of drones has changed warfare. Our Bloomberg Originals investigation later this hour. It's just gone 8:30 a.m. across the Emirates. I'm Bonnie Quinn in Dubai, and let's take a look at those markets. We saw a reversal in futures. They were pointed higher earlier. That swiftly changed as markets reacted quickly after an explosion was heard in the central city of Isfahan. Now, since then, we know that Isfahan's nuclear sites, which are outside the city, are safe, completely safe. That's according to Iranian state TV. And then Tasnim is now saying, it's another Iranian news organization, is now saying there wasn't any report of any attack at all. So there's a lot of downplaying on the part of Iran, and we've been seeing markets come off the boil. Gold, which had reached $2,417 an ounce, is well back below $2,400 an ounce. We also saw Brent crude well above $90 a barrel, and now it's just above $89 a barrel. So a lot of risk sentiment is just getting a little bit calmed here. We did see Asia take the brunt of the reaction, though, so let's get to Avril Hong in Singapore for a little bit more on what happened to equities and beyond in Asia. Avril.
Yeah, Vonnie, it was helter-skelter earlier. We saw a lot of risk aversion, safe haven demand, stocks slumping, and now some sense of calm is returning to the markets. We're seeing the Nikkei move off the session lows of about 3.5%. I want to highlight here, though, we're seeing amid all this and the news trickling in, the CSI 300 has seen relative outperformance versus its Asian peers, and a sign perhaps that Chinese markets are really decoupled from the global financial markets. It has to be said also that the infotech sector has been bearing the brunt of the selling today. Triple whammy, not just because of the geopolitical tensions and the risks there, also from the Fed speak and TSMC trimming its outlook for the chip sector. Now let's flip the board, because it wasn't just the stocks that were hit. We also saw the impact on currencies as oil prices surge. We saw that renewed pressure coming through, safe except for the Japanese yen, which actually saw some safe haven bid. The rupee at one point hit a fresh record low as well, Vonnie.
April, thank you so much. April Hong there in Singapore with the latest market reaction. Now, back to our top story. Iranian media rejecting reports now of an attack. The semi-official Tasnim news organization denying a report of attack, even though we have two U.S. officials confirming to Bloomberg News that Israel launched a retaliatory strike on Iran today. So let's get the latest and at least try and weave some of these strings together. Bloomberg's Paul Wallace joins us now. Paul, it's a fluid situation, and of course there's optics to consider as well. It seems like Iran doesn't want this to get out of hand.
It seems like that so far from their initial response to what U.S. officials are saying. So U.S. officials are telling us privately that there has been an attack on the central city of Isfahan, which is Iran's #3 city, not on a civilian area, on a military site. The New York Times is saying that a military base has been hit. From everything we can tell so far, it does seem like a fairly limited response from Israel to last weekend's attack on its drone and missile attack on its territory by Iran. If that does turn out to be the case and there are no more attacks today or in the coming days, I think that's an outcome that would go down very well with the US, with Europe, and with Arab states. It would be a response, a fairly high-profile response from Israel that sends a warning to Iran, but at the same time doesn't necessarily cross the threshold that would force Iran to counterattack aggressively and, in the worst case, trigger an all-out war in the region.
And Paul, it seems that U.S. officials have also confirmed to Bloomberg that the administration had been notified that a retaliatory attack would take place, 24 to 48 hours post Thursday. If that's the case, did the U.S. agree to anything because this was going to take place?
Well, that's a good question. The U.S. has consistently said in the last few days that whatever, what happens with Israel in terms of Iran is up to Israel. That the U.S. says it doesn't dictate to Israel what it can and can't do when it comes to military matters. And I think that's been borne out since October the 7th, when the Israel-Hamas war erupted in Gaza. The U.S. will obviously try and persuade Israel to do or not do certain things, but it is not going so far as to threaten to take away military aid or anything like that if Israel doesn't do what it wants. So it is quite possible that Israel told the U.S. something was coming in the next day or two, or as those reports suggest. Israel doesn't tend to give very specific advice. It likes to keep that secret, yes, and give sort of let's say guidelines as to what's coming, to give the US some heads up, but not a total one.
Paul, thank you so much. That's Paul Wallace there joining us this morning in Dubai. Let's get to Charu Chanana now, head of FX strategy at Saxo Markets. Charu, we already saw FX markets sort of volatile. On Friday afternoons, it seems to be the case that they go a little bit wild these days, but this really sent some of them into a tailspin. Can that get dialed back?
It seems like, a lot of those moves have actually been dialed back, but the one that I would actually be looking, to dial back further would be certainly the move that we saw in Japanese yen. Japanese yen has not been behaving as a safe haven asset anymore, especially when you consider geopolitical risks, right? Because if these geopolitical risks were really to escalate, we would be here again talking about the fact that US inflation could continue to go higher, and the possibility of Fed rate hikes coming back to the table also in a big way, which means that both actually the US treasuries as well as the Japanese yen cannot be a safe haven in this scenario. So that's a move that I think could continue to unwind further. But the moves in particularly the Swiss franc would be the one, where safe haven behavior can continue if at all these risks were to come back again in the headlines.
Right. It's interesting what you say that, some of those traditional safe haven assets can't be safe havens anymore. But beyond the Swiss franc, what will become the safe haven?
I was actually quite surprised when these headlines around Israel's attack hit to see that the reaction from the very oil-dependent NOK, the Norwegian krona, was pretty subdued. So I think that's one place where we could see some more of a reaction, and particularly if we were to expect any kind of a retaliation from Iran. Certainly, the downplay of this whole situation that we've been seeing from Iran, it could mean two things. One, that they don't want to retaliate. I think that's the higher probability outcome, but also there's a low probability assumption here that they could have had some serious damage, which they are trying to cover here. And I think we really need to wait for any videos to kind of uncover there. And if that is the case, if there is any strong rhetoric coming out of Iran and that kind of threatens oil supplies, I would expect a greater reaction, particularly from NOK, but also to some extent from the Canadian dollar.
From the Canadian dollar, fascinating. The US dollar index, does it continue to strengthen, Charu? And how much pressure is that going to continue putting on EM currencies?
Tremendously. I mean, US dollar has so many legs to support it, right from this increasing hawkishness that keeps coming through from the Fed, from the US economic data. So far, I think the story around the Fed was to push out the rate cuts from this year's expectations in the Fed curve. But I think last night, again, in the US, that story turned a little bit further with Fed's member Williams kind of saying that there's also potentially a tail risk of a rate hike this year. And he's one of the more respected members of the Fed committee, right? So I think that is an increasing level of hawkishness, which is yet not priced into the Fed curve. So I don't see that ending anytime soon if more of those Fed members kind of, start to highlight that as a tail risk. That continues to lend some support to the US dollar, along with, this risk-off environment that we are seeing in the equity market as well, because, the AI enthusiasm that we've seen for a very, very long time now, that's kind of cooling on. We saw ASML earnings this week, and then TSMC last night kind of pruning its outlook as well. There's certainly going to be some outperformers in the AI space, but it seems like that broad AI sentiment is starting to cool down a little bit, which again means this risk-off environment in the equities could extend further and also lend some more support to the US dollar.
Charu, we have the yen now at 154.41. How much can Japan policymakers take of this weakness? And, I mean, does it ultimately help them in some ways?
So we've seen 152 break very easily there, and this move above 154 now is, some kind of a more strong, defense coming out, and especially when, we've seen headlines around Korea joining, Japan in light of the weakness in the EM currencies as well, and kind of a nod from Janet Yellen as well, saying that, she might be a little bit more tolerant of Japan's intervention at this point. I think there is a reason to believe that 155, 156 could be the next line in sand. But certainly, I think Japanese authorities would be quite wary of intervening in an environment where, dollar is in such a strong position. US yields continue to rise because any amount of money they spend on intervention here will prove, to be a failure and ineffective. So they really need to wait for the right time. I think next week is quite critical in that sense because because we have the Bank of Japan meeting on Friday, and they are kind of laying the ground for a hawkish narrative in that meeting, saying that a weak yen is fueling inflation concerns and things like that. So if that narrative is going to come out of that Friday's meeting, I think, any intervention could be a little bit more effective with that kind of a narrative. So I think next week is pretty critical for where the yen goes.
Charu, thank you so much for joining us this morning. That is Charu Chanana, Head of FX Strategy at Saxo Markets. Plenty more still ahead. Do stay with us. This is Bloomberg Middle East and Africa. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. Iran's recent salvo, the April 13th one, saw a barrage of drone and missiles fired toward Israel, with most repelled by the US and its allies. Bloomberg Originals has been looking at just how much drones have changed the face of conflict.
Iran's unprecedented attack on Israel made the new reality of conflict very clear. From Iran to Ukraine, this is the era of cheap drone warfare.
Kyiv endured an aerial assault by Russian drones.
The Kremlin seeing the biggest drone attack yet inside Russia.
Missiles, drones, a barrage of attacks in the Red Sea.
Iran has started a direct attack on Israel by launching dozens of drones.
Drones have changed the landscape of war.
It's like the AK-47 of 21st century warfare.
They're a feature of the modern battlefield, mostly because they're so inexpensive and easy to make. And many of these drones can be traced back to Iran, a country under strict international sanctions. So how are drones changing the economics of warfare?
This attack was a direct response to something that happened on the 1st of April when Israel bombed a building close to the Iranian embassy in Damascus. There were some very senior Iranian generals in that building who died in that attack.
The Iranians had to respond.
These were designed to overwhelm Israeli defenses while a separate battery of missiles were following at the distance. So if everything had gone to plan, the missiles would have been able to penetrate those defenses. We've never seen a swarm this big. Scores all set off at the same time, and it could be a game changer in the way war is conducted.
Asymmetry is often what decides a conflict. That's effectively when one side is more powerful than the other.
Historically, at least in the modern history of warfare, every technological advance has come from the technologically superior military power. So the most powerful countries got more powerful, and the gap between them and the rest widened.
To address this kind of mismatch, the weaker power seeks a way to catch up. An asymmetrical tool.
Drone warfare is a way to close the capability gap, and it's a way to diffuse power.
Drones come in a full spectrum.
Most of the drones that we're using in the West, like the Reaper drone, which has been somewhat the iconic drone that we've used since 9/11, which cost in the region of $30 million.
At the other end of the spectrum are the drones we saw over the weekend. They are what are called kamikaze drones. All they do is carry a payload of explosives, and they ram into a target and blow up. In military circles, they're called lawnmowers on wings.
People are saying that the Shahed drone is Iran's AK-47 because it is extremely versatile and can be produced in high quantity at low cost. Now we entered into the next phase of drone warfare, which is low-tech drones at large quantities.
The main Iranian drone company is called Shahed Aviation Industries, which the US says is a subsidiary of the Revolutionary Guards.
They have been using scores and scores of small companies to circumvent sanctions.
They have their own smuggling networks globally where they can get their hands on any sort of component part that they need.
Shahed drones can be found in Syria, Russia, Ethiopia, Tajikistan, and Venezuela. The Shahed 136 is the best known. It carries up to 50 kilograms of explosives and has a range of up to 2,500 kilometers, which lets Iran strike targets within Israel without needing to use proxy forces in Lebanon, Gaza, and elsewhere. This is where the economic consideration comes in.
They cost anywhere between $20,000 and $50,000.
Others are even cheaper. as little as $1,000.
Each missile the Israelis were using cost in the region of hundreds of thousands of dollars, if not millions of dollars. America and Israel together probably spent around $1.5 billion in defending against the Shahed drones, while the Shahed drones all put together probably cost the Iranians in the region of something like $3 million. You can drain your enemy's military budgets by them having to restock their air defenses at a very high cost.
If Iran didn't have these drones and these missiles, it would have to send jet fighters over long distances in order to attack Israel. If Israel shot down those jet fighters, that would be a huge blow for Iran.
Iran's proxy in Yemen, the Houthis, have already managed to clog up trade in the Red Sea with the threat of drones and inexpensive but accurate missiles. Drones have changed the war in Ukraine too. Cheap, consumer, mainly Chinese models have been adapted to drop explosives on multi-million-dollar tanks, and more sophisticated drones have been used to great effect against the Russian Navy.
Those drones have been key in Ukraine's ability to destroy quite a large part of Russia's naval fleet in the Black Sea.
The US military has leaned increasingly on fewer but more sophisticated and more expensive weapons systems. All of this is provoking big rethinks about how to kit out modern armies.
Over time, we need to find a better way to defend against these drones at lower cost.
We know that the US has been developing weapons to counter the threat of drones. Lasers, the use of anti-aircraft weapons. The German anti-aircraft weapons have been very effective in Ukraine, for instance.
But there's a big economic challenge here too.
For defense industry, it's more profitable to rely on the multi-billion-dollar research and development of sophisticated platforms where you only sell one or two or three of.
In other words, big defense companies don't consider cheap drones an attractive business proposition. To change that thinking, governments would need to provide defense companies with the motivation to build the tech.
I think what is needed is an incentive and a push to say we need more platforms at cheaper cost and use them in a networked way.
Subscribers can watch the full documentary on the terminal right now or catch it on YouTube later today. Plenty more still ahead. Stay with us. This is Bloomberg Middle East and Africa. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. Oil rallied strong this morning on fears of a wider regional conflict after an explosion was heard in an Iranian city. That being dialed back right now after Iran's media is saying that actually nothing happened. We also do, though, have two U.S. officials confirming to Bloomberg that Israel launched a retaliatory strike on Iran. Let's get into all of this now with our senior energy reporter, Stephen Stapczynski. Stephen, it's a very fluid situation, and I don't want to say you can't trust anything that comes across the wire, but there are a variety of stories, right, that are appearing out there. What does seem to be the case is that there was some kind of a retaliatory strike and the U.S. knew it was coming. The oil market, though, reacting very strongly. We had oil Brent well above $90 a barrel, and now we're back to 88.66. What can we tell about how, jittery the oil market is if we see a $2 a barrel swing just like that in the space of a few minutes?
I mean, I think overall the market is anxious. And while they're digesting all the information coming in, right, the market was open when we first heard some unverified reports of explosions in Iran and other places. And then the oil market was also open when our competitors, as well as Bloomberg, were reporting that U.S. officials had known about this strike. And then now Iran is sort of downplaying the situation where they say that there were no large explosions or missile strikes, but instead were perhaps some small drones, which they didn't say where they would have come from, but I think the implication would be that there was some sort of response from from Israel, but Iran was able to deter it. All of that together, there's a bit of a fog of information, and the oil market is swinging because of that. But with a $2 rise in Brent, it does show that there are fears among traders that this could spiral into a larger conflict. Does this mean that Iran retaliates again? And what does this mean for production? The Middle East is a huge producer of oil, and if there's any disruption to supply, you could see a further spike in prices.
It does appear, though, that below $90 a barrel is where stability is right now, so nothing further than what we've already seen, no, wider regional conflict, that this would be pricing fundamentals. Is that how you would read the situation?
Yeah, I think, we're around $90, right below $90 is probably where the market is comfortably. Of course, there is a war risk premium that's been priced in for months, but there is no additional risk. I don't think the market is really expecting a wider conflict at the moment. And $88, $89 Brent is more, yes, it is sort of reflecting where we are, which is OPEC Plus has cut back supply, and they've done that. They have their production cuts through the end of the second quarter. Demand in certain places, including China, has been more resilient than people had expected, and therefore we are in a bit of a small deficit at the moment, which does support prices where we are right now.
Stephen, thank you so much. Stephen Stapczynski, our senior energy reporter, joining us there. And just to check Brent again, it's one of those assets that's really reflecting what's going on in the market right now. We have Brent at 88.84 a barrel. Treasuries, though, also a big safe haven. This is Bloomberg.